we have gotten the housing market so into such a state where, as you know, virtually all mortgages are one way or another government financed,
Right.
government guaranteed.
Right.
And we get the impression that because of that, the private market is dried up. Well, of course it has. The difference here is that we don't have any good sense of what is out there, X, the actions of Fannie, Freddie, Ginnie, and the operation. And I would frankly like to see, at least in an academic simulation, what the yield spreads would look like if the government was not there. I mean, this may sound like ancient history, but I served on a savings and loan holding company board in 1962. And all we had really to finance mortgages was savings and loans. And it was an incredibly effective market. We had a huge amount of home construction because the baby boomers were just building up, and you were having the Levittowns and all the other types of operations going on. But I will tell you, aside from the very chronic concern that those of us as economists or finance people who were in the S&L industry felt very uncomfortable about the fact that a savings and loan institution as constructed at that point was not a viable institution. It required that inflation was low and therefore interest rates were low, and you could play the yield curve, which is indeed how a lot of those holding companies had stock prices at 50 times earnings. I mean, it was really extraordinary what was going on back there. But it struck me, especially after the S&L debacle many years later, that there's nothing wrong with that particular model if we could get the people to swap their short-term overnight liabilities into longer-term debt. I mean, it would have cost another 100 basis points. I'm not sure what it was. But the short-sightedness, it was something you couldn't get around. And when you look at Northern Rock in the recent crash, that was essentially the same thing. They went from deposits, which were reasonably stable, to short-term financing.
Right.
Why? Because they could get a few basis points less.
Right.
And I would be very curious to get a sense of what the current housing market would look like if the government were out. I know there are several things. One, interest rates, mortgage rates would clearly be higher. But the question is, how much higher? The size of the market would be smaller because of that. And is that all bad? I mean, we went through a period of hyping up housing in every conceivable respect. And I think it was a general consensus within the economics profession that we were putting too much of the nation's capital into home ownership. And the fact that it turned around so dramatically with the crash, remember, we erased virtually all of the run-up in home ownership in a very short period of time. Tells you how unstable that is. In any event, before we get into the notion of which of these various different pockets we wish to put the new sets of regulation in, it would be useful to get a sense of what the alternatives are. To start merely with saying we're going to start somewhere in the middle presupposes a degree of subsidization, the size of which we do not have the slightest clue about. And I think we'd get a much broader notion of what would work and what would be to the nation's interest if we first had some view of what level of degree of subsidization we find desirable and acceptable. And I don't think we're getting into that discussion. It sounds to me as though we're sort of starting somewhere in the middle, working our way backwards and forwards. And I've been looking at this market for generations, and I don't have a clue what we have here. I do know that a home mortgage, an amortized 30-year mortgage, has a value to an investor. The only question is, at what yield? I mean, I have no doubt that you could probably sell subprime mortgages at almost any volume if people wanted to take the risk that would be implicit in the mortgage and accept the 13% yield or whatever the number would be.
Right.
But let's get a sense of what it is we're trading off here rather than making the key decision before we go to square one.